Based on the historical data and forecast, Bitcoin shows a volatile trend with periods of consolidation and upward momentum. The support price remains consistently at 86300, while the resistance fluctuates. The RSI readings indicate that the asset is generally within a neutral range, occasionally dipping into oversold territory. Considering this, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 30, signaling an oversold condition, and the price touches the support level of 86,300. The entry price will be $86,300. To mitigate risk, we will set a stop loss just below the support level at $85,500. The initial target price will be the nearest resistance level, which is $93,300. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating overbought conditions, we will take partial profits at $94,300. Conversely, if the price falls below the lower Bollinger Band, we will reevaluate the position and potentially adjust the stop loss. The overall portfolio will allocate 60% to the RSI-based long position, 30% to a short position when the RSI exceeds 70, and 10% to a hedging strategy using options. This diversified approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently tested the support level of $3,190 and is forecasted to reach $3,490 within the next week. The RSI indicates that the asset is currently not significantly oversold, fluctuating between 40 and 58. However, the Bollinger Band suggests potential opportunities. The price is currently near the bottom band, indicating a possible bounce. Therefore, I recommend a long position strategy with an entry price of $3,220. A stop loss should be placed just below the support level at $3,180 to mitigate potential losses. The initial target price should be set at the upper Bollinger Band of $3,280, offering a quick profit. To capitalize on the upward trend, I suggest a second long position when the RSI reaches the oversold level of 20, which is expected around $3,000. The stop loss for this second entry should be at $2,980, and the target price should be $3,410, aligning with the forecast. Combining these two strategies creates a portfolio that balances risk and reward. The first position aims for a quick profit, while the second position targets a larger gain based on the overall bullish trend. This combined approach maximizes potential returns while minimizing downside risk. Based on the historical data and forecast, XRP demonstrates a sideways trend with fluctuations around the $2.1 to $2.2 range. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, with the bottom band consistently around $1.92 to $1.95 and the top band around $2.29 to $2.53. The forecast for the next week projects a slight downward trend, with prices ranging from $2.06 to $2.12. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the price touches the lower Bollinger Band and the RSI dips below 40, indicating a potential oversold condition. For example, if the price reaches $2.06 on December 10, 2025, and the RSI is below 40, enter a long position at $2.06. Place a stop-loss order at $2.03, just below the established support level, to limit potential losses. Set a target price at $2.18, aligning with the recent resistance level and aiming for a modest profit. If the price does not reach the target price, we will exit the position when the RSI reaches 60 to secure a small profit. This combined strategy aims to capitalize on short-term price fluctuations while mitigating risk with defined stop-loss and target levels. Based on the historical data and forecast, BNB shows a fluctuating trend with periods of consolidation around the $880 to $900 range. The RSI indicates that the asset has recently been in oversold territory, with values dipping below 40, suggesting a potential bounce. The Bollinger Bands show that the price is currently near the lower band, further reinforcing the possibility of a short-term upward movement. Considering these factors, I recommend a long position entry at $883. Place a stop-loss order at $825, aligning with the established support level to mitigate potential losses. A target price of $898 can be set, aiming to capture a portion of the recent upward momentum. To optimize the strategy, I propose a portfolio combining the RSI, Bollinger Bands, and support/resistance levels. The primary strategy is a long position entry at $883 with a stop-loss at $825 and a target at $898. If the RSI reaches 80, indicating overbought territory, consider taking partial profits or tightening the stop-loss. Conversely, if the price breaks below the $825 support level, exit the position immediately. This adaptive approach, blending technical indicators with key price levels, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Solana shows a fluctuating trend with recent price consolidation around $135. The RSI consistently remains below 50, indicating a generally neutral to slightly bearish momentum. The Bollinger Bands have been contracting, suggesting a period of low volatility. Considering this, I propose a moderately bullish strategy with a focus on short-term gains. We will enter a long position at $134, coinciding with the forecast price on December 13, 2025. A stop-loss will be placed at $131, just below the established support level, to limit potential losses. The initial target price will be $139, aligning with the recent resistance level. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI crosses above 50, indicating a shift in momentum, we'll adjust the target price to $144. Conversely, if the price touches the lower Bollinger Band, it signals a potential oversold condition, and we'll maintain the position with a revised target of $136. This dynamic approach allows us to capitalize on short-term movements while managing risk effectively. The portfolio will prioritize this strategy due to its clear entry, stop-loss, and adaptable target prices, offering a balance between potential returns and risk mitigation. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI values fluctuate between 32.8 and 52.7, indicating oversold and overbought conditions. The Bollinger Bands show the price fluctuating within a range, with the recent movement suggesting a potential bounce from the lower band. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI falls below 20, and the price touches the bottom of the Bollinger Bands. The entry price will be $0.281. To manage risk, set a stop-loss order at $0.27. The initial target price will be $0.287, near the resistance level. To optimize returns, we will implement a trailing stop-loss strategy. Once the price reaches $0.287, we will move the stop-loss to $0.28. If the price continues to rise, we will adjust the stop-loss accordingly. The final target price will be $0.29, based on the upper Bollinger Band. This strategy combines RSI and Bollinger Bands to identify high-probability entry points and manage risk effectively, aiming for significant gains while protecting capital. The portfolio will prioritize this long position, allocating 70% of the investment capital, with the remaining 30% held in reserve for potential opportunities. Based on the historical data and forecast, Dogecoin shows a downtrend with some volatility. The price has been fluctuating between a support of $0.139 and a resistance of $0.155. The RSI has mostly been below 50, indicating a weakening upward momentum, and has recently dipped into oversold territory, suggesting a potential bounce. The Bollinger Bands show that the price has been oscillating within a narrowing range, which indicates decreasing volatility. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My recommended strategy is to implement a combination of RSI and Bollinger Bands. We will wait for the price to touch the bottom of the Bollinger Bands, around $0.135, and the RSI to be below 30, which is an oversold condition. If both conditions are met, we will enter a long position at $0.136. The stop loss will be set just below the support level at $0.134. The initial target price will be the middle of the Bollinger Bands, $0.146. If the price reaches this target, we will move the stop loss to break even, $0.136. If the price continues to rise, the final target will be the resistance level at $0.155. This strategy aims to capitalize on short-term bounces while limiting potential losses. Based on the historical data and forecast, Cardano exhibits a downtrend followed by a potential reversal. The RSI consistently remains below 30 for a significant portion of the historical period, indicating oversold conditions. The forecast suggests a gradual increase, with RSI values trending upwards. Considering the support price of $0.414 and the Bollinger Bands, I recommend a long position strategy. Enter a long position at $0.435. Set a stop-loss order at $0.414, just below the support level, to mitigate potential losses if the downtrend continues. The initial target price is $0.461, aligning with the upper Bollinger Band and a reasonable price increase based on the forecast. To optimize returns, I propose a dynamic target price adjustment. If the price reaches $0.461, move the stop loss to break even at $0.435. Continue holding the position, adjusting the stop loss incrementally upwards as the price advances. If the RSI reaches 80, consider taking partial profits at $0.48. This strategy combines the benefits of RSI-driven entries, Bollinger Band-based targets, and support level protection, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a clear upward trend, supported by the consistently rising forecast prices. The price has bounced off the support level of $3,450 several times, and the RSI has frequently dipped into oversold territory below 40, indicating potential buying opportunities. Combining this with the Bollinger Bands, we can formulate a robust investment strategy. We will implement a strategy focused on capitalizing on short-term dips while maintaining an overall bullish stance. Our strategy involves a tiered approach. Initially, we will wait for the price to pull back to around $3,480, which aligns with both the recent forecast and the lower Bollinger Band. At this entry point, we will set a stop loss at $3,450, just below the established support level. The primary target price will be $3,690, coinciding with a significant forecast price and the upper Bollinger Band. To maximize potential gains, we will implement a trailing stop-loss strategy, adjusting the stop-loss upwards as the price moves higher, aiming for a final target price of $3,770, the highest forecast price. This approach balances risk and reward, ensuring we capitalize on the upward trend while protecting against potential downturns. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend, supported by consistently breaching the $591 resistance level and the forecast predicting continued price increases. The RSI consistently fluctuates above 50, indicating bullish momentum, with values nearing 60 and 61 during the recent period. The Bollinger Bands have been widening, suggesting increasing volatility and potential for further price movement. Considering these factors, I propose a long-term investment strategy focusing on capitalizing on this upward trajectory. We will enter a long position at $591, placing a stop-loss order at $556 to protect against potential downturns. The initial target price will be $606, aligning with the forecast for December 15, 2025. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will consider adding to our position at the prevailing price, with a revised stop-loss placed slightly below the recent low. Conversely, if the RSI exceeds 70, signaling an overbought condition, we will partially take profits at $606 and set a trailing stop-loss order just above the upper Bollinger Band to capture further gains. This dynamic approach, combining trend analysis, forecast data, and RSI signals, aims to maximize returns while managing risk effectively. The final target price will be $606 plus any additional gains captured through the trailing stop-loss mechanism. Based on the historical data and forecast, Morpho is exhibiting a clear downtrend. The price has consistently tested the support level of $1.2, and the RSI readings are predominantly below 30, indicating oversold conditions. The Bollinger Bands are contracting, suggesting decreasing volatility, and the forecast predicts further price declines. Therefore, I recommend a short selling strategy. We will enter a short position at $1.29, placing a stop-loss order at $1.38, just above the recent resistance level. The initial target price is $1.15, aligning with the forecast for December 16, 2025. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 20, indicating an oversold condition, we will consider entering a short position. Conversely, if the price touches the bottom of the Bollinger Bands, it could signal a potential rebound. However, given the prevailing downtrend and the forecast, we will prioritize the short selling strategy. If the price reaches $1.15, we will adjust the stop-loss to break even at $1.29 and set a new target price at $1.16 to capitalize on potential further declines. This combined approach aims to maximize returns while mitigating risk through strategic stop-loss and target price adjustments. Based on the historical data and forecast, Zcash has been exhibiting a downtrend with significant volatility. The price has tested the support level of $341 multiple times, and the forecast indicates continued price fluctuations around the $420 mark. Considering the RSI values, which have been consistently below 50, indicating a weakening momentum, and the Bollinger Band showing considerable width, suggesting high volatility, a contrarian strategy targeting potential rebounds is warranted. I recommend a long position entry at $425, placing a stop-loss at $411 to mitigate potential downside risk. The initial target price should be set at $442, aligning with the forecast high for December 15, 2025. To enhance the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $427, it signals an oversold condition, strengthening the long entry at $427. The stop-loss remains at $411, and the target price is adjusted to $450, capitalizing on the anticipated rebound. This blended strategy combines the RSI and Bollinger Band signals, providing a more robust and adaptable approach to navigate the current market conditions. This portfolio will be the most efficient of the three strategies. Based on the historical data and forecast, Avalanche has been in a downtrend, with prices fluctuating between the support of $13.2 and the resistance of $15.2. The RSI indicates periods of oversold conditions, particularly around December 5, 2025, with a reading of 30.5, and overbought conditions on December 9, 2025, with a reading of 49.4. The Bollinger Bands show a narrowing trend, suggesting decreasing volatility. Considering these factors, I recommend a contrarian strategy focusing on short-term pullbacks. My strategy involves identifying opportunities when the price approaches the lower Bollinger Band and the RSI dips below 35. For example, when the price reaches $12.5, coinciding with a low RSI, enter a long position. Set a stop-loss at $12 to protect against further declines. The initial target price is $14, aligning with the forecast price and the middle Bollinger Band. If the price continues to rise, a secondary target can be set at $15, near the resistance level. This approach combines technical indicators with price action and forecast data to maximize potential returns while managing risk. Based on the historical data and forecast, Celestia demonstrates a volatile trend with periods of both upward and downward momentum. The RSI consistently hovers around the oversold level of 30, suggesting a potential buying opportunity. The Bollinger Bands show that the price is currently near the lower band, indicating a possible bounce. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.586 with a stop loss placed just below the lower Bollinger Band at $0.578. The initial target price will be the center of the Bollinger Band at $0.583, aiming to capitalize on a short-term rebound. To refine this strategy, we'll incorporate a trailing stop loss based on the Bollinger Bands. If the price moves above the center band, we'll adjust the stop loss to $0.583. If the price continues to rise and reaches the upper Bollinger Band, we'll increase the target price to $0.587. This dynamic approach allows us to maximize potential profits while minimizing risk. The RSI reading of 30.4 on November 26, 2025, further supports the long position, as it indicates an oversold condition. This combined strategy leverages multiple technical indicators to identify optimal entry, exit, and risk management points, aiming for high returns in a volatile market. Based on the historical data and forecast, Polkadot exhibits a downtrend, with recent price fluctuations around the 2.1 to 2.3 range. The RSI consistently remains below 46, indicating an oversold condition and potential for a bounce. The Bollinger Bands show that the price is approaching the lower band, further supporting a potential rebound. Considering the forecast data, the price is expected to remain around $2.13 to $2.19, suggesting limited upside potential in the short term. Therefore, I propose a contrarian strategy targeting a short-term bounce. The entry price will be $2.13, coinciding with the forecast price and the lower Bollinger Band. A stop-loss order will be placed at $2.08, just below the lower Bollinger Band to mitigate potential losses if the downtrend continues. The target price will be $2.35, near the support price and the middle of the Bollinger Bands, aiming to capture a potential rebound. This strategy combines RSI oversold signals, Bollinger Band analysis, and support level proximity to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano exhibits a downtrend followed by a potential reversal. The RSI consistently remains below 30 for a significant portion of the historical period, indicating oversold conditions. The forecast suggests a gradual increase, with RSI values trending upwards. Considering the support price of $0.414 and the Bollinger Bands, I recommend a long position strategy. Enter a long position at $0.435. Set a stop-loss order at $0.414, just below the support level, to mitigate potential losses if the downtrend continues. The initial target price is $0.461, aligning with the upper Bollinger Band and a reasonable price increase based on the forecast. To optimize returns, I propose a dynamic target price adjustment. If the price reaches $0.461, move the stop loss to break even at $0.435. Continue holding the position, adjusting the stop loss incrementally upwards as the price advances. If the RSI reaches 80, consider taking partial profits at $0.48. This strategy combines the benefits of RSI-driven entries, Bollinger Band-based targets, and support level protection, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown volatility with periods of both upward and downward movement. The RSI consistently fluctuates around the 40 level, indicating neither strong overbought nor oversold conditions. However, there have been brief dips into the oversold territory below 40. The Bollinger Bands have been widening, suggesting increasing price volatility. The forecast for the next week indicates a generally sideways trend with slight upward pressure, hovering around the 0.255 to 0.265 range. Given this analysis, I recommend a moderately bullish strategy focusing on capitalizing on potential upward movements while mitigating downside risk. My strategy involves a long position with an entry price of $0.255. We will set a stop loss at $0.234, just below the recent support level and the lower Bollinger Band to protect against unexpected downturns. The initial target price will be $0.265, aligning with the upper end of the forecast range and the recent resistance level. If the price reaches $0.265, we will move the stop loss to break even to secure profits. If the price continues to rise, we can set a second target at $0.28, the resistance price. This strategy aims to capture short-term gains while carefully managing risk through strategic stop-loss placement. Based on the historical data and forecast, Internet Computer shows a downtrend with recent price fluctuations. The support price is consistently at $3.04, while the resistance is at $4.02. The RSI fluctuates between 35.8 and 44.0, indicating periods of oversold and overbought conditions but generally trending towards oversold. The Bollinger Bands show the price recently trading near the lower band, suggesting a potential for a bounce. My strategy involves a combination of RSI and Bollinger Bands for optimal returns. First, I will implement an RSI-based strategy. When the RSI falls below 20, I will enter a long position at $3.43 with a stop loss at $3.04, just below the support level. The target price will be $3.8, aligning with the forecast price and the middle Bollinger Band. Second, I will use a Bollinger Band strategy. When the price touches the lower band, I will enter a long position at $3.71 with a stop loss at $3.04 and a target price at $4.02, the resistance level. Finally, I will implement a combined strategy. When the RSI is below 36.2 and the price touches the lower Bollinger Band, I will enter a long position at $3.74 with a stop loss at $3.04 and a target price at $4.02. This combined strategy provides multiple layers of confirmation, maximizing the probability of success while minimizing risk. Based on the historical data and forecast, Pudgy Penguins demonstrates a volatile trend with recent recovery. The RSI consistently hovered below 50, indicating a generally weak momentum, but recently climbed above 40, suggesting a potential shift. The Bollinger Bands show periods of contraction and expansion, with the price frequently touching the lower band, indicating oversold conditions. The forecast for the next week predicts a gradual increase, reinforcing a bullish outlook. Given this analysis, I recommend a long position strategy. We will enter a long position at $0.0114. The stop loss should be set at the support level of $0.0106 to mitigate potential losses. The initial target price will be $0.0125, based on the forecast and the upper Bollinger Band. To optimize our portfolio, we will combine RSI and Bollinger Band strategies. The RSI strategy will trigger entries when the RSI falls below 30, oversold, and exits when it reaches 60, overbought. The Bollinger Band strategy will signal potential buy opportunities when the price touches the lower band and sell signals when it touches the upper band. Combining these indicators provides confirmation and reduces false signals. Therefore, the final strategy is to enter a long position at $0.0114, set a stop loss at $0.0106, and target $0.0125. This combined approach leverages the strengths of both indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates, indicating neither strong overbought nor oversold conditions for extended periods. However, the recent RSI values have been approaching the 50 mark, suggesting a potential strengthening of the upward momentum. Considering the Bollinger Bands, the price has been oscillating within the bands, indicating moderate volatility. The forecast data projects a continuation of the upward trend, with prices expected to reach $0.434. Therefore, my strategy focuses on capitalizing on this upward momentum while managing risk effectively. I recommend a long position entry at $0.368. The stop loss should be placed just below the lower Bollinger Band at $0.323 to protect against potential downside risks. The initial target price should be set at the resistance level of $0.434, aligning with the forecast data and providing a reasonable profit margin. If the price reaches the target, consider moving the stop loss to the entry price of $0.368 to secure profits and potentially ride further upward momentum. This strategy combines technical indicators with forecast data to maximize potential returns while minimizing risk.